How's it going, everybody? My name is Antonio, and I am back for some resource talks today with Willem Middelkoop, who is not here with us today, though, as your financial advisor. This is a conversation that's going to be general and impersonal in nature, with the main goal of it being entertainment and not financial advice. Given that we are going to be discussing highly risky sectors where failure is kind of the norm, it is in your best interest to do a lot more research and take your own decisions. Wear your big boy pants in the end and always take your own decisions. And that all said, Mr. Middelkoop, thank you for investing your time with me, sir.
Yes, well, thanks for inviting us.
Pleasure is all mine, of course. We met in Zurich, but I've been following you for a couple of years now. And I'm looking forward to this conversation. And like, I know the answer, and I think most people know the answer to what I'm about to ask you here, but this is your first time on the channel. So obligatory first question, who are you and why do you think you're worth listening to?
Well, the first part of the question I can answer easily. Second part is more up to you. I've had quite a different background than most of the people in this business. I've been a journalist for 20 years, for over 20 years. I started as a freelance photojournalist when I was a student in Amsterdam in 1980. My last position was I was a picture editor-in-chief for a Dutch daily around 2000. Around that time in the 1990s, I also started to invest in real estate, started to get very interested in the financial system. Actually, that started already in 87. And that interest made me move over from, the picture desk to the economics desk. And I started to write about the economy, about investing. And then I saw a news report that we would have the start of the Dutch CNN, which turned out to be RTL Z from RTL Television in the Netherlands, which was a news station covering news, breaking news, and especially news from the world of finance and business. And I sent them a note. I knew some people there. I had worked for Dutch television in 1991 for a local station for 4 years, so I knew how to do that job a bit. And then, that seemed to be a perfect fit. So I started to work as a market commentator for Dutch TV on the Dutch Stock Exchange. Need to go live 7 times a day. To inform the public everything what's happening in the world of finance, and I've done that for 7 years between 2001 2008. But I did that 3 days a week. I was a freelancer, and I was for the other 4 days I was a private investor actually, and I was investing more and more of my time and money. Especially, I was looking for a hedge. I had all these investments in Amsterdam real estate, and I got worried about this mountain of debts, and I started to study the system. I wanted to hedge myself. Started to buy my first gold and silver in 2001, 2002. Start to invest in mining shares. And that was the start of a very long journey, and that journey is ongoing up till now.
And then in 2008, you started the Commodity Discovery Fund, I guess. How much money are you guys managing now? How much has that grown since?
We started around 2008 with just some friends and family money, 20 investors, 3 million euros. Last year, around this time, we had over 160 million euros investments. That's 200 million Canadian, 2,000 high net worth investors currently with our fund. And I started the fund for 2 reasons. When I worked for RTLZ, I became more and more convinced that we would enter a serious crisis within the next decade. So this was around 2005, 2006. And actually, I started to work on my first book, which is quite well known in the Netherlands, called Als de Dollar Valt, It's in the 17 print run. Currently, has been the best-selling book in the world of economics ever in the Netherlands. And I came to the conviction that people would get scared about the architecture of world's financial system and the debasement of currencies. And I was very early in that game, but I became convinced that this was a house of cards. And I started because I'm also I like to invest, but I also like to start companies. I always see a lot of chances. So I decided that there would be a need for a place to invest in the precious metal space, because in the Netherlands there was nothing available. You couldn't buy any physical gold and silver. The banks had closed their gold windows. And so I started a web shop, which made it very easy for people to buy gold and silver. I sold that one 3 years later. I started that one in 2008 as well, sold it in 2011. We had yearly sales of 100 million euros then, just selling gold and silver. But I thought it was a bit, well, it was like selling computers, you know. It was just simple product, and there was a lot of revenue, there was a lot of sales, but profits, the margins were quite small, and I didn't like that business that much. And I also started an investment fund, a commodity discovery fund. It was called the Golden Discovery Fund at that time, and that had another reason. I was a private investor in gold and silver equities from 2003, 2004 on, as I told you. And I discovered around 2004, 2005 that if you invest in smaller companies, smaller miners who are working on a significant discovery on gold or silver, they outperform the market. And I was intrigued by that idea. So I really started to study that from 2004, 2005. I started an investment ladder, Middelkoop Discovery Alert Service, which we published in 2006, 2007, early 2008. We had 1,000 subscribers in over 30 countries. And then a friend of mine who was working in the financial industry, he told me, "You're stupid, you know, you sell your best tips." We tipped investors on great discovery holes, so showing new discoveries. And he told me, "You're stupid, you sell your best tips for $150. You should build a fund around that idea. That's a great idea." And that's how it all started.
Nice. It's a cool story. And you're mentioning your books, and that's something that I've been willing to ask you, because you published a book you started writing The Great Reset in 2013, I believe.
The Big Reset, eh?
Yeah.
The Great Reset is from Klaus Schwab. He stole the title.
The Big Reset, that's right. No, that's a good point. But you published it in 2014, if I'm not mistaken. You started writing it in 2013. And, you know, you've been, the things that you just told me, that you're expecting the dollar to fall and you see a lot of debt in the system and all these things. You've been saying that the reset is imminent. I mean, since that book came out. So what makes you think that now it's actually imminent? And I guess, what does imminent really mean in this situation?
If you look at the title of my first book, it's like I predicted the dollar would fall. And if you say the dollar will fall, people will think it goes to zero. But I was talking more about a coming collapse of the current dollar system. And you can compare that with the British Empire and the fall of the British pound, the pound sterling. The pound sterling used to be the world reserve currency in the 19th century. And then, of course, the British Empire isn't here any longer, but the British pound is still here. It didn't go to zero. And the same, it's a similar situation for the US dollar. So the US will lose a lot of its power, and it's a hegemon now, and we're living in this unipolar world anchored around the dollar, centered around the dollar. And I think we'll move away. We are moving away as we speak. So if you ask me how imminent are these changes, is this big reset? As we speak, we are moving away from a unipolar world to a multipolar world, which means it's not only all about the dollar anymore. And why do I know it's happening as we speak? Because the Financial Times published a story today that Saudi Arabia is willing to join the BRICS alliance, and then it gets very interesting, because as you might know, the dollar was anchored to gold from 1944 till 1971. 1971, Nixon took the dollar off the gold standard. And then there was a crisis, a confidence crisis around the dollar, and Kissinger came up with a wonderful plan. He's quite a genius. He just turned 100, by the way, and he convinced the U.S. administration to team up with Saudi Arabia and make this petrodollar deal, in which the Saudis promised they would only sell their oil and oil of the OPEC countries for in US dollars, and that has been ongoing since 1974, and this has been the reason why the dollar stayed strong. And now we know that the Saudis started selling oil to China, not in dollars, and the Chinese, they just pay in their own currency. And this is the end of the petrodollar deal, and that's the end of the strong support for the dollar. And also explains, if you look at the chart of the US dollar, it has been going down for the last 6 months. And so there's some pressure there, and the system is changing. And the BRICS alliance is getting stronger and stronger. There are a few dozen countries who might like to join the BRICS alliance. And the BRICS alliance is thinking about starting their own financial system, starting their own club. They have their own bank, the new development bank, which is headquartered in Shanghai, and which is actually being run by the former Brazilian president Rousseff. So there's a lot of developments, and so I can say it's not imminent. We're in this reset process. So when we're in 2030 and look back, we will conclude so much has changed in the last 10 years.
What do you think is going to build confidence in the BRICS, though? Because if I look at those currencies and I ask myself, who do I want to be, like, who do I want to trust my money with? Basically, do I want to trust it with Xi over in China? I don't. Do I want to trust it with Putin? I mean, I don't know.
It doesn't matter. It doesn't matter what you think. Nobody's interested in what you think. Sorry.
True. But
but if the Saudis accept Chinese money, then it's game over.
Game over, as in there's bifurcation of the market, or it's game
over for the petrodollar system, and which is the foundation for the US dollar.
What does that mean for me as a commodities investor, though?
That commodity prices will start to rise and the dollar will start to fall. Actually, that has been happening in the last 12 to 24 months. And what happened after the start of the Ukraine war shows it all. Look what happened to the lithium prices, 5x. Look what happened to the nickel prices. And we're just at the start of this. And nobody, even a smart guy like you, who's working on this podcast, for quite some time, still doesn't seem to get it. And I don't want to be disrespectful, but I understand this, because it's very hard to understand, because you really need to understand how the financial system works. And trust me, the guys in Saudi, they understand this. And the guys in Brazil do understand this as well. That's why they're teaming up with China now. And what's backing these currencies of the BRICS countries? These are the commodity producers. Why didn't the ruble collapse? Because they have all these commodities. And China, the Bank of China, acts as world central bank for commodities now. They arbitrage all the Russian commodities. So that explains why the ruble is still strong.
So
and the great thing, I always love to learn that people don't understand this, because it gives me a reason to explain it, but also gives me a wonderful advantage as an investor, because you can only make money when you understand something a bit earlier or better than the general public. Because once everybody understands this, they will all start to buy commodities and exposure to commodities, because it's not about paper anymore. It's not about the paper-based dollar system anymore. It's about the world of commodities now and hard assets. And the BRICS countries understand, and nobody's taking this serious. But we will learn it the hard way in the next few years.
What is the next few years? How long is that? That's what I wanted to ask.
Well, like I said earlier, when we look back in 2030, that's 7 years from now, we'll conclude that so much has changed, and we'll conclude there was a few smart guys out there who understood this and loaded up on cheap commodities while it was still possible.
What kind of commodities are we talking about here? Because if I look at the pie chart of your fund, 62% is precious metals dominated. It's gold dominated, actually. It's more than that. 74% is precious metals. So 62% gold, 12% silver.
The rest is battery metals and uranium.
Yeah. Well, I saw uranium in there. I see that that's roughly 6% of your portfolio. I've been covering uranium for now a couple of years. What is your general take there?
Well, we've been witnessing a decline of uranium since the very strong bull market in 2006, 2007. And we've been, shouting from the rooftops that uranium at $25 was a steal, and we would see a strong move upwards. And that happened a few years back. That was the first start of the bull market in uranium, the new bull market. We had a correction, which is always, the normal way financial markets work. After a strong run-up, you get a correction. And then we are about to break out now for the second leg up, and that could be a violent move towards $100. If you look at the spot market, we're trading just over $50. Longer-term contracts are trading around $60, $65. The all-time high is around $130, $140. I expect the next move to be towards $100. And then you'll see that the uranium-related equities will make strong moves again. And that's what we are waiting for now.
What I meant when I asked you about your general take is sort of tongue-in-cheek, as in, why is it only 60% as opposed to gold? Like, why do you see the opportunity in gold being 10 times as big as uranium?
You should always look at the size of the markets. Uranium is a very small market, so it would be insane when we would be for 50% of uranium. And we're quite a bit momentum driven, and gold is in a very strong, has a very strong momentum. It's one of the best performing commodities recently. And also gold is the hedge on the financial system. So we're always overweighted on gold. It's a large market, but it's also the hedge on all our other assets and investments we have. So we try to be in the strongest uptrends. We always will be overweight in precious metals, but currently our silver positions, our uranium positions are not that large because the market is still in a corrective phase, and we're waiting for the breakout. But we're adding to positions in lithium, we're adding to our positions in uranium, we're adding to our positions in silver. We expect a very strong bull market to return this summer or later this year. So that explains the composition of our fund.
Sure. Does that, your expectation, does that include, now with the debt ceiling allegedly almost being a done deal, and so liquidity being sucked out of the market, out of the financial economy and into the TGA, wouldn't that be net negative? Like, wouldn't that mean like, hey, wait a couple of months before you start adding to these positions?
Now the debt ceiling has been lifted again. If you look at the long-term graph of the US national debt, there's only one limit, that's the sky. If you lift the limit, you'll print more dollars. And if you print more dollars, the value of the dollar should go down, and commodities should go up, and gold should go up. And we had this triple top for gold in US dollars around 2000, we're waiting for a break of this triple top. This will happen, can happen any week. And this will happen later this year for sure. And then you can expect a strong leg up for everything commodity or precious metals related. But I think also commodity related, because the dollar will see some pressure.
I guess that's over more of a long period outlook, though, because over the short run, the TTA sucking in dollars would put demand pressure on the dollar. And so wouldn't that create relative strength, at least over the short run?
We are not interested in short term.
Okay, that's a fair point. That's a fair point. Well, what are you interested in terms of
long term? Very long term.
No, I mean it's no, yeah. I mean in terms of companies, though, you're the Commodity Discovery Fund. When we look at the Lassonde, something like the Lassonde curve, for example, is it strictly discoveries?
We started out as a discovery fund. We're still a discovery fund. It started totally focused on discoveries. And what do I mean with discoveries? It means that when a company, or preferably a rather small company like an exploration company, makes a world-class discovery, you have a situation in which a company which was valued at 10, 20, or 30 million dollars suddenly jumps to a few hundred million or even few billion dollars. And this is a wealth creating effect we only know from crypto. You know, we have had several situations where an investment went up not 10x but 50x or 100x, and that's quite rare. So we really like that strategy. It's like my baby, you know. It's a strategy I built and recognized around 2005. I've been studying it every day ever since. And now after almost 20 years, I start to understand it. I made a mistake to start a commodity fund in 2008, because in the rear view mirror, turned out that 2008 was the top of the last cycle for commodities. Look at the CRB index. It topped in 2008, just before Lehman crashed. And then we had a down bear market and a bottoming out market for 15 years. And the problem is we invest in the smaller companies, the junior exploration companies. So the major producers, the major gold producers already are up for the last, 2 years. But if you look at there's an index, the Toronto Stock Exchange Venture Index for the smaller companies, the TSXV or the CDNX, it's trading almost at a 100-year low in valuation compared to the S&P 500. So I had the fortune to discovery investing in 2005. I was unlucky to start a discovery fund in 2008. The best would have been to start it in March 2020 after the COVID crisis, because that was the low in our market. Our NAV was 43 at that time. It's 75 now. So we're well up from that bottom, but we're still way down from our high. We traded as high as 250 in 2011. But during this bear market, which took 15 years, and the bottoming out phase, which took us almost 10 years, we've had 4 years in which we had gross returns of over 70%. So it shows you this is a very volatile sector. It's high risk, high reward. And once the markets start to move upwards, things go very fast. After the COVID crash, March 2020, where we were down big time, March 2020, and then we had 5 months of double-digit returns back to back. And 1 month, April 2020, we were up 39% in 1 month. This is amazing, the volatility in this space.
Yeah, volatility is definitely. Is it a bug? Is it actually a feature? You can talk about that too. I like looking at it as a feature for now, but I can imagine it's challenging when you're managing a fund.
To come back to your last question, because I didn't answer it fully, and that's why we decided to only invest in these exploration companies for, let's say, 50%, and the other 50% is invested in the more liquid names and like ETFs or producers.
Okay.
And we spread our risks quite a bit, because we have this database of the 100 most significant discoveries worldwide, and we have 60, 70 core positions out of this list of the top 100. So we spread our risk over a lot of investments, and we try to get our volatility down, to diversify also on uranium and lithium. And some of these metals and minerals, they have a different cycle, and uranium is a good example. So we succeeded in bringing down the volatility of our fund. And we also use some hedging techniques for that. And we also hedge our currency risk, because currency risk is quite high, because the euros we receive from our investors are invested in Canadian dollar, Australian dollar, US dollar, and British pound.
What would you do differently, though, if you could go back to 2008? Looking at some of the charts that you have up on your website, it seems like you're flat-ish since then. Again, if you raise all the volatility, what would you do? I mean, the idea obviously is to make money. So what would you do differently if you could go back?
Well, not start at the top of a cycle.
No, sure. I mean, more specific, like in terms of the picking companies and the strategy behind it.
Well, actually, not that much, because we're in this for the long term. I always call this the Middelkoop pension fund. I'm 60 now. It's about where are we in 5, 10 to 15 years, and then let's sit down again and have a chat of the advantages or disadvantages of discovery investing. What we have shown now, so we started at the top, around the top of the last cycle. What we've shown that overall we didn't lose money from the start, especially if you adjust for costs, and we had 4 years of 70 to 90% growth return. We survived the Lehman crash. We survived the largest commodity crash. We survived the COVID crash. So it shows that from a risk management, you can play this very dangerous and high risk, high reward stocks in a way you can survive the largest downturns. And if you look at our stock picking capabilities, we had 80 buyouts in our portfolio since our start, which means we found a small company who made a discovery, and we thought the discovery would be strong enough, large enough, significant enough that a major would come and buy them out, take them out. It happened 80 times, and that shows
80 times out of how many total? Because I know the portfolio is rather large, right?
Oh yeah, I think we've been invested in 300 names.
Okay, but still a good hit, right?
But that's quite a good hit rate, and we're getting better at this every quarter, because we're more concentrated in our portfolio now. So it's quite easy for us to understand now, to know when a discovery will be worthwhile for a major to take out. But now it gets interesting, because in the last 15 years, which was a bear market, we learned to be a good discovery investor. And in a bear market, a bear market is a much better academy for investing than a bull market, because in a bull market we're all genius. So in this bear market we really learned what works and what doesn't work. So now, after surviving a bear market for 10 to 15 years and building this system and perfecting this system, we have a full-time researcher now in Hong Kong, we have a full-time researcher in North America. We dare to say we don't miss any significant discoveries anymore. It was only 5 years ago we started to study Australia. The best discoveries are made in Australia. It's very underexplored. There are over 400 listed exploration companies. And most North American investors and European investors, they ignore Australia, and that's where we have our best hits. So imagine I'm right. I'm right about the big reset. I'm right about the BRICS countries. I'm right about we'll see the start of a new monetary system centered around commodities, which is also the thesis of Zoltan Pozsar of Credit Suisse. You might know that name. Imagine I'm right. And it will be all about commodities. And it will be all about the green revolution. And we need battery metals. And we'll see shortages on the battery metals. And we'll see shortages on commodities. And commodities are turning out to be the new money. And when you make a new discovery in a metal or commodity which is short supply, it will skyrocket. Imagine we're right about that thesis. What will happen to a fund which has a 100-year low valuation in commodities now and was able to build a 100 million plus portfolio in the worst bear market ever?
Yeah.
That's a dream. That's a dream. And that's why I'm not depressed, although we're down from the start.
Yeah. No, I spoke to some of your guys in Frankfurt when I met them at a conference. And we were talking about that you're actually having net inflows to your fund, which is, I mean, it's very interesting to see net inflows into a commodity fund in this depressed of a market.
We're the only one. We're the only one out there.
Yeah.
And we've had net inflow every year since our start.
Yeah. You must be doing something, right? You must be a marketing genius. So
no, but we don't have a marketing budget.
No, but you're marketing. You yourself are marketing.
Well, I'm. If I get an invitation from a guy like you who's seriously interested to hear about the story, then we sit down and I tell the story like it is. That's the only thing we do. That's really the only thing we do. And what I learned that it was a bit difficult at the start. Even my friends called me crazy when I started to buy physical gold in 2002. They thought I was a lunatic. And then when I started this fund, they thought I was strange. And then we had the Lehman crisis, and then some people got interested about the debasement of currency, but it was still a smaller percentage. But after the COVID crash, it really took off. The inflows really started to grow because most people who have more than a few brain cells now understand that debasement of currency, inflation, security of supplies, shortage in commodities. Before the Ukraine war, hardly anybody was ever thinking about commodities and where they were produced. And now people are all aware of this, most people. People are very interested now to join or to invest in commodities. And I always tell the audience when I give presentations, I don't care whether you buy physical. I don't care whether you buy ETFs. I don't care whether you invest with us. I like it when you invest with us, co-invest with us. But I want you to have exposure to the world of commodities. I want you to be hedged against a paper dollar system. And more people start to understand this. And that makes me very happy. And we're only at the start of this, because if you look at the valuations, as I said, rock bottom valuations still. And we all know the next century or the next decades will be world of commodities.
Let's hope you're right. That's what Zoltan says. I've actually interviewed Zoltan. This is kind of a high in my career.
Wow.
Yeah. Congrats. I didn't get him myself, though. Somebody else helped me get him, but I did speak to him.
Doesn't matter.
So that was.
And well, then I was hoping you recognize his name, but when you've interviewed him, you must have read his analysis, and everything I just told you, it's his thesis, and it's not our thesis because we read it, because Zoltan wrote this down. We've been saying this for 10 years, and I'm very happy that Zoltan understands this perfectly. He's a former Federal Reserve official. He's one of the leading analysts at Credit Suisse. He's highly... he's one of the great experts, and if you look at I think it was his first essay, and which was 2 weeks. He published this 2 weeks after the start of the Ukraine war, and it was titled Bretton Woods 3.0. And when I remember it correctly, he said, we're witnessing the start of Bretton Woods 3.0, the start of a new monetary system centered around commodity-based currencies coming from the East. And he said, a crisis is unfolding, a crisis of commodities. Commodities, are collateral. Collateral is money. I can memorize it because I read it a few times. And he understands it so perfectly, and he wrote it down in such a beautiful way. Still, most people don't understand it. I don't care, but it shows me that he's a very bright fellow, and we could be on the right track.
No,
because
sure.
what he's writing and concluding is this the big reset. It's happening as we speak.
It's his thesis on the supply chains of cheap money, cheap labor, and cheap commodities is really what also sort of turned on the light for me to start really understanding it. Although when you called me smart a while ago, and I want to correct you in that because that's not true. Because I moved my 100%. I moved my liquid portfolio. I moved 100% into commodities in 2020, which was in the summer of when gold and silver stocks went up quite a lot. And I got very excited, and I thought I was a genius. So when you said that a bear market is sort of the best academy,
humbling experience,
hit close to me. So
that's a humbling experience, and we've had this humbling experience for the last 15 years. I thought I was a commentator on Dutch TV in 2007, 2008. I thought I understood it all, and then to see in the rear view mirror that you start a commodity fund at the top of the cycle, just before the longest downturn. That's not that smart.
Yeah.
Makes you humble again. Yeah.
Humbling experiences. Yeah, you're right. You said something just a couple of moments ago that you now understand what makes a discovery interesting for majors. So I want to steer the conversation in that direction. What does a discovery, what does make a discovery interesting for majors, in your opinion?
Well, we all know that a major producer in the world of commodities and also in the world of energy, when they don't add to their reserves, they'll end the year with less reserves than they started because they are producers. So they always should try to find new reserves within their own projects or by adding new projects or buying new companies. And if you look at the current M&A activity, Newmont just made an offer for Newcrest. Why? Because they can't grow their own portfolio in a normal, natural way. So they need to take out one of their competitors to be able to show growth to the shareholders. So that's the general idea in the world of commodities. But the best way to grow their portfolio is to become the owner of a new significant discovery where somebody was starting to drill barren land, which wasn't worth anything, and finding a deposit, a gold deposit or a copper deposit or uranium deposit, which is valued sometimes the gross metal value in one of these projects is over 100 billion. So you have a piece of barren land worth nothing, and then after 10 or 20 or 40 drill holes, it's worth 50. The gross metal value is worth 50 billion or more. And what happens to the company being responsible for that drilling program? As I said, that jumps from 10 to 20 million market cap to 1 or 2 billion sometimes. And that's if you experience that once as an investor, as a private investor, it's like the crypto guys. I don't know if you own crypto, but if you've seen your money, go up 10x or 100x in a short time frame, I had some beginner's luck, and I tipped a company, Aurelian Resources, in 2006. It was trading at 30 cents, about 10,000 shares. They were drilling in a very prospective area in Ecuador near Peru. And it was beginner's luck because I didn't understand. I understand this much better now. But they made a wonderful discovery 6 weeks later, and this Aurelian Resources stock price jumped from 30 cents to $43 within 18 months.
Mm. Mm.
That's amazing.
It is, but how do you find that before it jumps? I mean, I can see it now in hindsight. What do you look at before it jumps so that you know, oh, this is gonna go?
Well, after that discovery, I continued with my Middelkoop discovery letter to try to predict the new Aurelian. But and actually, when we started the fund, we were trying to predict the new Aurelian. But we stopped doing that. We don't invest in companies hoping they will make the big discovery, because that's a 1 in 10,000 chance. So what we do now, we pivoted our portfolio, our strategy. We invest after the discovery hole. So we missed the first 100 or 200% move up. But once there's a huge discovery, and a great example is Philo Mining. Philo Mining was working on a nice copper gold discovery in the Andes for quite some time. It wasn't a world-class discovery, which means it has a certain large size. So we ignored it for the first few years. And then suddenly they drilled a new zone, and that was a massive zone, and that changed the outlook for the company. And it was so massive that BHP came in a few weeks afterward with 100 million, showing how producers are on top of these stories as well. And we bought the first shares in Philo Mining for $8, and that was very, very high price, because it used to be trading sub $1 a few years back. But we entered with a very high conviction, willing to pay $8, $9, $10. It's trading around $25 now. So it's about recognizing what are the most significant, valuable, and most important discoveries, and then place your bets, invest your money, and you can decrease your risk doing that. Only go for the winners.
Yeah, well, that's what I'm asking about, I guess. If it sounds like I'm asking about your secret sauces, because I am, how do you recognize a best discovery? Like, what do you want to see? Grade, length, width, whatever.
It's, in a way, it's very easy. If I show you a whole 1,000 meter of 100-gram gold per ton, on average, you'll recognize that as a great hole. But most of the time, it's much more difficult because there are so many factors. But we have been doing this since 2005, so we really understand the business now, and we know which management systems are to be trusted. We know which regions are of interest. We know which type of geological settings are of interest. But there's no certainty. So there's always risk involved, because there are more bright commodity investors out there. We still make mistakes. I think as an investor, you always keep making mistakes. You're always, in most of the times, 99 out of 100 times, you're a suboptimal investor. But we try to tweak the system and make it better and better. We just discussed a story here in this room about the lithium discovery in Brazil. It was on our radar for a few months, but we didn't pull the trigger. And today we learned about a new hole, and now it's too significant to ignore. And we just bought our first shares. But we discuss it in our team. We have a lot of experience. We can ask some technical advisors to look at it, but it's an art, and one of our slogans is the art of discovery investing. It's difficult, but once you understand this, it's tempting to keep doing this.
Can you give me maybe some deal breakers then? Like, what's something that when you see it in a company, you're like, okay, not touching that discovery. It's not a real discovery. It's a fake out or something along those lines.
Well, when it's in Russia, we don't touch it. So you have certain countries where you don't want to go. Most people will say management, if the management is bad, but I don't agree, because I've seen the best discoveries being run by awful management. And are you familiar with Robert Friedland?
Sure.
Yeah. Well, he became a billionaire by discovery investing. Yeah. Everybody says he's a genius. Well,
but he has the ability to switch out. I mean, to switch out, man. No, people probably shouldn't say that, but his whole clique. There are people who can go into a company, change the management. They can even, change.
No, but let's go back before his first big discovery, a Voisey Bay discovery. What was it, in 94, 95?
Yeah, something like that.
He had a very bad name in the industry. He was seen as a second-hand car salesman, or worse. And then he made this wonderful discovery, not because he was a great in management, he was a great deal maker. He was, I think, one of his best developed talents is the art of the deal. Sell it at the highest price, and then he had enough money to buy into the new best copper discovery in Asia and the best copper discovery in Africa, and he made a brand new copper discovery in the DRC. So he turned into one of the world's greatest discovery investors, but everybody in the business said he was bad management. So it's about the quality of the discovery. You can't change what's in the ground. You can change management.
Yeah, that's something that Rick Kroll always tells me as well. But again, he's sort of part of that the spot where he can enter into a company and try to do a little bit of activism, although albeit a little bit on the background, if you will. What's 2023 going to bring us in terms of those discoveries? Because I don't think you have had any takeovers in your portfolio this year so far.
Oh yeah, we had some.
Okay.
Yeah, I'm just looking at our website because I never remembered all of them. I don't know if we're up to date on our website, but
I don't think you are, because the last one is Uranium Minerals, and that was in 2022.
Yeah. So we're at number 80 now. We had a few in the last few months. Can't remember the names now. My head is full of other stuff. But we had 4. So we're on track. On average, we have 6 to 9 buyouts every year. So we're fully on track.
Nice.
So Terence, what was the last one? Buyout? Sabina.
Okay.
Resources.
Nice.
That was one. We had a few smaller ones. But M&A activity is increasing, and that's what's changed now. Because we have this conflict, not only in Ukraine. The Ukraine conflict is like a proxy of the West against the rest conflict. It's the conflict of the US against China.
Mm-hmm.
It's a conflict about between the Western financial system and the BRICS financial system, which is now in the making. And now we learned in the West we shouldn't be dependent on China. So there's a lot of activity now in Washington and Brussels to start our own supply lines for copper, for battery metals. So we hear from companies we invest in Africa, they're being contacted by the US State Department, making sure, they're being told, make sure this project isn't sold to China. We help you to get rich, but make sure this project isn't sold to China. So there will be a lot of money.
Bifurcation.
Yeah, and the West will really start to invest in their own supply lines, and we see the same with car manufacturers. They're doing deals now, direct deals with mines to be able to have enough copper or nickel or lithium, and that's a whole new situation, and that's why we are quite sure that the bull market in commodity is starting now. You don't see it reflected yet in the valuations, but that's because markets are slow now, and people are afraid for a recession and a market crisis. And I just got a list from the other companies being bought out this year. Chesser Resources in West Africa, gold discovery, and of course Newcrest. The Newcrest, we had a position in that one as well.
Can we ask Terence to give us a list of who's going to be next?
Yeah, we'll share that at the end of the interview.
Okay, yeah, hindsight. Sure. No,
Yeah.
You said you're looking at Australia. That's also an interesting, mostly looking at Australia. Is there anything specifically that you can tell me? Because I don't know anything. I don't even know what to ask, but you piqued my interest.
Oh, well, I can mention a few companies. I think
Please do.
that's because these are the larger ones, and it's well known within the industry. So I don't expect that this will move the markets. But one example is Greatland Gold. Greatland Gold has a joint venture with Newcrest. Newcrest has the Telfer mine in the Patterson area in Australia. Greatland Gold made a wonderful discovery, copper gold discovery a few years back. We were there at the start, so it was an amazing run for us, 2,000% and up. And now Newcrest takes over, Newman takes over Newcrest. Everybody in industry thinks that the Telfer mine, which is almost at the end of its economic life, will be sold by Newman. But the new discovery by Greatland Gold is just 40k away from the Telfer mine. So there's this joint venture between Newcrest and Greatland Gold to develop this project. Production from this Greatland Gold discovery will start next year in the old Telfer mine. So now we expect Newman to divest the Telfer mine, to sell it probably to Greatland Gold. So Greatland Gold will become a producer. And of course, this is all uncertain. So we've seen a lot of selling in the shares in Greatland Gold. Greatland Gold is at a very low valuation. It's one of our largest positions. It's in the top two, only just behind SolGold. And we expect Greatland Gold to be bought out or to develop this themselves into and to become a medium-sized producer. Another very interesting situation is SolGold. SolGold being responsible for the largest undeveloped copper gold discovery in Latin America. And BHP has a stake, Newcrest has a stake, but I think it will be sold to an Asian group, a Chinese group. A Chinese group already has a stake of about 10%. So these are a few of the names we think will be bought out. Another name is Tinka Resources, a wonderful lead, zinc, silver, a tin discovery in Peru. Well, it's not the best country, it's not the best postal code, but two Peruvian producers of base metals already own a large stake in Tinka. So it's not, the question is not will they be bought out, it's only when will they be bought out. And if you look at the valuation of Tinka, it's sub 100 million. That's a steal as well. So these are some of our core positions. Very low valuation. We sleep very happy at night owning a strong position. We own almost 10% of Tinka. We own over 1% of the other companies. So we sleep very well at night because we know these are very valuable projects and the valuation is very low. We would love to see higher valuation, but that will come in time.
You say valuation is very low. When I look at the market cap, I'm seeing Greatland, the $365 million, SolGold almost 500. What is sort of the price that you can reasonably expect for such a discovery to get taken over at? I mean, we saw
at least 1 billion. At least 1 billion.
Okay. Okay.
Yeah.
Yeah. No, it's interesting to understand how you approach these things. I know you're also looking to sort of downsize the number of positions that you're holding
Yeah.
right now. What is your target? Like, what do you want to go under
Well,
100 or?
we sold 70 positions in the last few quarters.
Wow.
We were very active, as you might remember. Well, actually, you told about that. We had a bull market in 2020. When everything was starting to run in the precious metal space, in the commodity space. We had a very strong inflow in 2020, 21. We did a lot of private placements, many companies. Some of them worked, some of them didn't work out. And then you end up with these smaller positions into your portfolio. You know, they're just, the total valuation of that position is around 100,000. It doesn't move the needle. It keeps dropping, and then, well, sometimes it's better just to sell it at a loss, make the portfolio a bit more, well, cleaner. And we hope to, well, actually, we're almost done with that process. So we have around 60, 70 projects in which we invested more, on average, around 1 million euros. So that's the largest part of the portfolio. And then we still have a bit of a long tail of investments. But most of these investments we will keep in our portfolio, because sometimes you need to have a toe in the water just to follow the company and the discovery a bit more closely. If you sell them down and you don't have any shares anymore, it's very easy to lose track of the company. So we always have this, well, you can always call it the watch list, in which we have small investments.
And people can get access to that, I believe, not necessarily through that, but through more of your research on Patreon. And also, if they're a member of your commodity discovery fund, you also do a monthly letter, I believe.
Yeah, well, there are a few ways to follow us. On our website, we publish our monthly report every month, but we don't have an archive, because otherwise people start to study them all and build a similar portfolio themselves. So you can drop by every month to read our monthly report. I'm very active on Twitter, but the more serious stuff and my best ideas on investing, I stopped sharing on Twitter, and that's behind the paywall now on Patreon. It's not a high fee. Like one of the investors said, for the price of a cheap lunch, you'll get Willem's best ideas. And I like that platform. And you can follow me on Twitter as well. Yeah.
Well, why'd you have to? I know there's a reason behind it. It's interesting if you can tell me about it. About you having to charge for that information, because I mean,
I don't need the money, but I got fed up with publishing everything on Twitter for free for the last 10 years, having over 100,000 followers, and then I had to close down the comment section, because there's always somebody who's trying to steal or hijack the discussion, or they start to promote their own crypto plays, or they start to call names, or I got fed up with that. And I know I have valuable content, and I just wanted to have a honest situation where I try to do a bit more for the readers, and they recognize that and are willing to pay the price of a cheap lunch for that. You know, I don't need the money, but it's just, it makes me think the content is valued.
Yeah, good point.
Fair deal, Tom. Fair deal.
Yeah, good points. Willem, I've already not been respectful of your time, because I've taken more than you promised me. So I'm just going to let it here. Thank you so much for being here. Hopefully we can do this again.
I like the discussion. Thank you so much.